Hello everyone, welcome back to my channel. If you're new here, make sure to subscribe as well as click on the thumbs up button and leave a comment below. JP Morgan CEO Jamie Dimon said clients of the bank can now buy Bitcoin, but he reiterated his long-held skepticism about cryptocurrencies. The move puts JP Morgan alongside other major banks such as Morgan Stanley, which already allows its financial advisors to pitch clients on some Bitcoin ETFs for eligible clients. While JP Morgan will offer Bitcoin access, U.S. banks remain constrained by Federal Reserve rules restricting direct involvement with crypto firms. The decision marks a notable step for the largest U.S. bank, particularly due to Dimon's history of criticizing the digital currency and the crypto market broadly, and is the latest sign of Bitcoin's entry into mainstream investing. The investment bank is exploring ways to deepen its involvement in cryptocurrency markets, navigating the regulatory landscape under the pro-crypto administration of President Donald Trump. Since Trump took office in January, the Federal Deposit Insurance Corporation and Office of the Comptroller of the Currency have rescinded their anti-crypto guidance, with the Federal Reserve partially following suit. A notice issued by the Fed in January 2023 continues to restrict banks from certain crypto-related activities. While banks can now custody crypto, they still face certain limitations on working directly with digital asset firms. The week kicked off with a bang for crypto exchange-traded funds. Bitcoin ETF posted a staggering $667 million in net inflows, pushing their winning streak to 4 consecutive trading days. Market optimism was clear, with only one outflow across the board. BlackRock once again led the charge, pulling in $300 million, nearly half of the total. Fidelity followed with $200 million, and ARK-21 shares raked in $150 million, underscoring renewed institutional appetite. According to analysts, Bitcoin shows a steady rebound without market overheating, signaling a healthier bull cycle. The world's largest cryptocurrency is showing strength again. Market data points to a steady rebound not driven by speculative spikes. Notably, this current pattern suggests a more stable phase in the current bull cycle. This suggests that the current price recovery is not built on hype but on more grounded investor sentiment. The analysis also shows that even though investor interest has improved since the last price correction, the market has not yet entered a phase of aggressive buying. Instead, there is a steady and measured rise in demand. Bitcoin has been thrust back into the spotlight by extreme price swings this year, with President Donald Trump's assault on the global trade order resulting in wild predictions of total US dollar collapse. The Bitcoin price has reclaimed $100,000 per Bitcoin, topping the closely watched level even as BlackRock quietly issues a stark Bitcoin warning. Now, as crypto traders brace for a perfect storm to hit the Bitcoin price, JP Morgan analysts have flipped from gold to Bitcoin, predicting the Bitcoin price will outperform gold over the rest of 2025. Last month, the JP Morgan analysts warned Bitcoin's burgeoning reputation as digital gold was under pressure as the Bitcoin price failed to hold up in the face extreme market volatility triggered by Trump's global trade war. The Bitcoin price plummeted to around $75,000 per Bitcoin, dropping over 30% from its all-time high of almost $110,000, as traders panicked over Trump's tariffs but has since bounced back to over $100,000. Standard Chartered projects Bitcoin could reach $500,000, driven by increasing institutional exposure through MicroStrategy stock. In the same way, institutions are gaining indirect exposure to Bitcoin via Strategy's MSTR stock. A recent U.S. crypto news publication indicated that Strategy, formerly MicroStrategy, held 570,000 Bitcoin as of May 2019. Holding a significant amount of Bitcoin on its balance sheet, Strategy's stock price correlates closely with Bitcoin's price movements. Analysts describe this correlation to a dynamic where Bitcoin is the base layer while MSTR operates as a vehicle with different risks, mechanics, and rewards. Against this backdrop, Bean Crypto contacted head of digital assets research at Standard Chartered. According to him, Bitcoin is still on course to hit $500,000 before the end of Trump's second administration. He describes this to deepening institutional adoption, particularly through indirect exposure via MicroStrategy shares. The data reinforce Standard Chartered's outlook that institutional and sovereign flows, both direct and indirect, will be a key driver of Bitcoin's ascent to $500,000 in the coming years. Bitcoin benefits from macroeconomic shifts, including China's rate cuts and the U.S. credit downgrade, boosting its appeal as a hedge against instability. Bitcoin price surpassed $105,000, driving institutional interest and triggering over $667 million in ETF inflows. President Trump announced the creation of a strategic Bitcoin reserve, solidifying his administration's view of cryptocurrency as a viable and valuable economic resource worth retaining. Trump pledges to make the U.S. the crypto capital of the world. The president hosted a digital assets summit with AI, with guests like Coinbase CEO Brian Armstrong and Chainlink co-founder Sergey Nazarov. In recent years, the U.S. government has foolishly sold tens of thousands of additional Bitcoin that were worth billions and billions of dollars had they not sold them. Trump said at the event, "From this day on, America will follow the rule that every Bitcoiner knows very well: never sell your Bitcoin." That's a little phrase that they have. I don't know if that's right or not. Who the hell knows? But so far, it's been right, and let's keep it that way. This is all for today. Thank you for watching.